let's get started. The questions have begun rolling in. I'll start right off the bat. Someone had a question for me. How low is gold likely to go? And will it likely languish or start to recover immediately? I think I kind of addressed that when I said nobody knows how low it will go. I certainly don't, and don't believe anybody who tells you they do. There were a number of people who posited some ideas of where the bottom was, including myself, over the last couple of months, and they were all, including myself, proven wrong. So don't believe anybody about that they can predict that absolute bottom. I do feel fairly confident that gold will not languish once it starts to recover. I think it will be kind of doing a 180 and burning rubber in the other direction, at least for gold, but most especially for the juniors. There's a lot of money still ready to come into the juniors, and the fear of missing out is a very real phenomenon in the junior mining sector. So when it does turn, it turns with a vengeance. So please, I urge you to get ready for that, and to give up any hopes of trying to pick the absolute bottom. Just start accumulating good companies at good prices and look down the road a year or two and be confident that they'll be selling for prices for levels considerably higher than where they are today. One of our first questions was for Jack with Bluestone. And it really is a corollary of a question I had. The question from the viewer was in regards to lateral and or vertical extensions of the deposit. Are you conducting any nearby exploration? And my kind of corollary to that was, how does this new open pit model affect your drilling program? And you know, where you're drilling, because drilling for an open pit scenario is different than drilling for an underground scenario. And are you trying to direct your drilling to not only have an impact by adding lower grade ounces, but also affect the potential strip ratio?
Thanks for that question. So the upper Salinas unit of the deposit contains about 1/5 of the measured and indicated resource for the open pit scenario. And so we are drilling that out right now. That's the 5,500 meters that I mentioned in my presentation that we'll be drilling between now and May. And that will make its way into an updated resource for the feasibility study. And there is a 2-kilometer northerly trend of similar characteristic mineralizations that Glamis drilled back in 2005 that we have yet to follow up on, and we very much intend to do so. We think we can find some near surface decent grades that could be amenable to satellite pits that would then feed the Cerro Blanco complex eventually. So there is an upside potential with exploration just to the north. And then when we drill out the surface of this deposit, and that will make its way into the resource in the end of this year for the feasibility study, I think we can add some more ounces and move some more in from inferred into the measured and indicated.
Great, thank you. And Jack, what's the timing on the drill results again? I mean, drill results and resource estimate.
So the resource estimate will come out towards the end of this year in parallel with our feasibility study. We plan to complete the drilling by the end of May this year. And then it's hard to predict at this moment lab times to turn back samples and get results from the lab. So, I mean, hopefully we'll be able by Q3 or early Q4 to come out with a mineral resource update.
Great, thank you. Alex, for Empress, what is your outlook? And you did address this a bit in your presentation, outlook for deal flow for Empress. I'd like to see if you can comment a bit more on that, but also you're at I think a valuable position in the market for our viewers, and that you're seeing deal flow in the broader market at large, and if money is still available despite this recent correction. So if you could comment on, first off, Empress and your deal flow, what you're looking at, and the broader market. Is there still activity out there, still interest? And has all of that been affected much by this 2-month-old, more severe correction, and really 7-month-old correction in the gold price?
In terms of the Empress deal flow, we obviously are working on the transactions I mentioned at the moment. So we're seeing a lot of opportunity. It means we're getting in, as the word's getting out about us and within our network, we're just seeing more and more opportunity out there. With regards to the gold price and commodity prices, I think some of the opportunities, some newer opportunities have been coming up to us in the last couple of weeks, have been situations where companies don't want to raise as much equity because their share prices come off or whatever it is, which then opens up more opportunity to do a stream or a royalty to kind of move them further along. So we're seeing more opportunity through this phase. And I think with our business model, we're able to adjust whether the prices are good or the prices are slightly off. We're able to work in both environments. So it's quite robust for us that way.
That's interesting. I hadn't considered that. So actually it's benefited you a bit in that mix when somebody's trying to raise money for debt, equity, streams, royalties is shifting a bit because of the drop in prices, perhaps shifting a bit in your advantage.
Yeah, and it's more what we can be able to bring to it. So, maybe we're looking before at a $2 million stream. Now they're talking about adding another $1 million on for a royalty because they don't want to raise as much of the prices where they're at. So those opportunities present itself when the market's going strong. Then they're able to raise the equity, and then they just need that little bit more to go. So we kind of work in both sides of it. Again, we're just seeing a lot of deal flow right now.
Yeah, and I guess that's the advantage too, of being right at the crux of the financing and arranging the financing deals along with your partners and creating those royalties. So
yeah, and because we're looking at other projects that are near-term production or in production, just need to expand. They need to be able to make these decisions quickly and are looking for the capital now. So it's much more of a now thing for us and the groups that we're working with.
Interesting. Good feedback. Good feedback. Again, for our viewers, please submit your questions in that big blue box under the viewer window. And we have some more. Peter, we're going to you for Erdene. And this is a mix of some questions we've gotten and questions that I had. The key, one of the, I don't want to say issues, but balancing acts, I guess, for Erdene is the balancing act between exploration, resource growth, and production development. You've got a wonderful exploration story. Yet, man, it would sure be great if you're exploring and you're getting $40 to $50 million in free cash flow every year to finance that exploration in the near term. But what would have the greater impact for shareholders, on your market cap, getting a great big high grade zone discovered, or advancing, key permitting advancements and the like toward production? How do you balance that, and what kind of feedback are you getting from investors, your institutional investors and the like, as to how you focus from one area to the other?
Thanks, Brian. I'd say it's a bit of a mix. You have those shareholders that are very fixated on cash flow and, getting to a point where the company has stability and doesn't have to rely on the public markets that we all on this panel have recognized can be very fickle. So having that stability is a key to many of our shareholders. There's another element that is purely focused on the exploration upside, looks at this new district and sees that multi-million ounce potential and wants us to drive forward to discover that and look at an M&A transaction. I've been in Mongolia now for 20 years, and I've done this because I saw an opportunity to find world-class open pitable copper gold deposits. We're just on the doorstep of that now. I see this still as a, just getting started point. And I do believe that us getting to the point of 60,000 ounce per year, $40 to $50 million in free cash flow makes us a much stronger company to unlock that multi-million ounce potential. So we'll continue to straddle those two objectives and find our way through. But very excited about what we see on the exploration upside.
Yeah, anything is a challenge, and if you got to have problems, that's a good problem to have. A lot of companies, they get in that Lassonde curve, and the belly of that Lassonde curve is to go to development, and they kind of go quiet and aren't able to deliver to the market any real meaningful or exciting news. But you certainly are able to do that. And with production so close, I know it's a tempting carrot to reach out to and get that cash flow. So that's one of the reasons why we've recommended Erdene and really liked the story. Moving on to David with Gold Terra. David, I think you know from my long history with the company, one of the challenges that when it was Terra X that you faced or the company faced was really a target-rich environment, and therefore, again, the kind of problem you like to have. But where do you start? Because there's so many different areas, so many promising prospects. And I was just begging the company to come out with a resource estimate, try and show the market that it's a really sizable resource there. And I congratulate you for doing that, because it is certainly a considerable resource at 700,000 ounces, and really much greater than I was hoping for one of your initial resource estimates and levels. Can you talk to us a little bit about the composition of that resource, open pit versus underground? If underground in high grade, which is obviously what you're looking for, is there any remaining underground development? I know there's tons of infrastructure, so please address that as well.
Okay, yeah, thanks for asking. I sort of blew past that in the presentation. We actually have a slide that for the audience that you can see the breakdown. But generally speaking, our 735,000 ounces, as I said, was put together at the end of 2019 at a very conservative gold price, $1,300, and it's made up of really mainly two deposits. Sam Otto, which we drilled last year. We drilled about 10,000 meters on that. It's a near surface or at surface bulk tonnage style disseminated sulfide deposit. It's still open along strike and at depth in some areas. And that's, the grade there is sort of lends itself to open pit style mining. And then, you've got, and that's sort of call it 1.2, 1.3 grams a ton. And then not too far away is Crestorum, which we drilled later in the summer. And that's a different type of target. It's, quartz veins, very high grade, Lodi. So requires a different style of drilling, that's for sure. And we drilled almost 8,000 meters there, drilled it to much greater depths, and made sure that we know that it's open at depth and along strike to the south, which we previously didn't know. So we're very happy with that. And that, has potential in our resource. So let's say Sam Otto is 500,000 or open pits, sort of, if about 500,000 of the 700,000 ounces. The higher grade stuff is more at Crestorum, which is what we worked to expand later in the summertime. I think there's also a really interesting new take on this Crestorum deposit, Brian. You asked about underground. Obviously, this higher grade stuff at depths of like 600 meters would be, thought of in a development plan as an underground mine. But it's starting to look like there's a really great potential for a high grade open pit, like a starter pit at Crestorum, which would then take you underground. And that's a story that will develop as we move towards our updated resource, which is coming out here very soon. We'll be able to talk about, where we're adding ounces, what our focus is. Look, I hope you didn't have to read between the lines. Our focus is on high grade. And in order to really move the needle in this camp, we need to find a cornerstone deposit that looks like a mine. And we believe that that's going to come from the Campbell Shear. So we're very excited about our existing resource. I'm glad you mentioned focus, because focus has been a challenge for the company. And so now our focuses are very simple, add ounces at the deposits that are part of our resource, and then make sure to go find, make a discovery on the, that's our primary focus. That's where we're going to be, that's where we're going to be with the next 20,000 meters of drilling, Campbell Shear.
Thanks. And one of the things that I stress to readers, and really newbies to the sector, people who are just getting involved in the mining sector, I tell them that it's very inefficient. And if you're willing to put in the time and effort, the research, then you can get ahead of everyone else. You can really find these undiscovered gems, or find these instances where the markets have undervalued companies for one reason or another. I think all of the companies here today qualify for that for one reason or another, and you as well with Gold Terra, because you have this renewed focus. I think that's going to come to light in the market and help the evaluation in the months ahead. Now, I'm glad you mentioned startup pit, because that brings us back to Bluestone and a question I had for Jack. You're transitioning obviously from high grade to open pit. Now that begs the question, all of those beautiful high grade resources you see in your resource model, in the open pit model, how close are they to surface? How close do they come to surface and a potential open pit? So how quickly do you actually reach those high grades in an open pit scenario? I think looking at your production numbers, that's probably as soon as the second year. Is that right? And how is that going to impact your planning, obviously your pit design, but also your planning and drill planning?
Exactly. So the Cerro Blanco deposit is comprised of two high-grade zones. So there's a north and south zone. And the way in which we've designed our pit phasing is to go after the north zone first, followed by the south zone. And then eventually when you get to a certain depth, those two pits will connect for one larger pit. And as you mentioned, Brien, you had it right. In year 2, we start to get to that high-grade zone, and we can sustain about 2 to 2.2 grams per ton for year 2 to 4. So for 3 years, we're able to achieve that high production profile of over 300,000 ounces of gold per year. So it doesn't take too long to get down to that grade. The first year, we do go through some of the overburden, and we'll be having around a year of, I think, around 180,000 ounces. But because this is near surface mineralization, you can get to that high grade core relatively quickly. And the final pit design does go down to where the lowest workings of the underground did in the previous mine plan. So we are capturing all of that resource in this new concept.
Yeah, the numbers really look spectacular, and very pleased to see that they really sing. It makes me kind of wonder why the open pit wasn't considered before. Do you have any comments on that? What brought you to the conclusion, or the company to the conclusion, that you needed to switch this model around?
Well, back when it was permitted for an underground back in 2007, the understanding of the geology was significantly different as it is today. And I think that Gold Corp was moving forward pretty quickly. They went and developed what now is the underground infrastructure, but those started out as exploration drifts to get a better understanding of the orientation of those veins. Previously, the theory was that there were 5 high-grade, thick veins in that comprised of that underground mine plan. But now with all of the drilling that we've done and all of the drilling that they did before we picked up the project in 2017, we really do understand this to be a different structure. So there's about 60 veins now within that resource rather than 5 high-grade veins. And then just the confirmation of drilling that we did from surface, and also the appetite for a project of this nature in the country at this time. We have engaged with both local and national stakeholders. So I've been here, I'm currently in Guatemala City, been here since November, and had key meetings with the Ministry of Environment, Ministry of Energy and Mining, and Ministry of Economy, and basically showed that behind Bluestone is the Lundin Group, the Lundin brand, and we know how to develop projects and maximize benefits of projects around the world. And we can use examples of what we just did at Fruta del Norte, and with the strong combined entity with the Lundin Foundation to really help at that local level to develop the capacity to support the mine and to support the local stakeholders. All of that has resonated well, and that's why we believe, not only are we making a project that looks better on paper, but it's a much easier execution plan. And so that means it benefits all stakeholders involved, including the shareholders and the local communities. And that's why we're going for it at this time.
Good to see. Back to Empress. Alex, I think we were all very pleased, if not a bit frightened, to see Empress soar out of the gate and essentially double in price within days, and come back from that now. So one of our readers is asking if you could comment on that recent whipsaw in your share price. I know that it has to be somewhat encouraging that the market at some point thought your company was worth twice what it is today, which seems to make the path back up that much easier. But were there any other factors involved that you've been able to find for that the way the share price just soared right out of the gate like that?
Yeah, I mean, we did the direct listing at the end of December, and finally we were able to get out there and start telling our story and bring some awareness to the company. I think what we've experienced in the last 10 days has been a free trading paper that was from the previous financing when we were private. So that sort of hit the market at the moment. But in terms of our business strategy, it hasn't changed. In fact, it's grown. You know, we were originally looking at 3 projects that were investments in progress when we went out to raise the initial capital. We've delivered on 2 of those. We're very close in the 3rd. I brought 2 more projects that'll be in production very soon. So we really are building our company out right now to have revenue coming in at the end of the year and have some significant revenue next year. So it's definitely been a bit of a ride, but we are sticking to our plan. We're delivering on everything we're saying we put out, like we're trying to do, and we're just building our business model. So it's still very early days for us, but I definitely think the last 3 trading papers have something to do with it. And we're just going to stay steady on how we're going to deliver and continue to deliver.
Yes, and of course, that is a key thing that investors need to look at. When I say it's an inefficient market, share structure and paper coming free, that's one of the primary things you look for as an investor in this sector. Is timing is everything. And if you can find these artificial weak spots in a share price curve, as it were, you can take advantage of it. And, you know, it looks like a real buying opportunity, especially for me to get into a really well-backed royalty company right at the beginning. Okay, so let us move on then. Next question is, we're back to Erdene and Peter. You're going back to the exploration versus development story, a balancing act. As you find resources external to the Brien Lundin deposit and pit, I know that you're finding some right outside the pit right now, but some of these further flung resources that you're finding, mineralization that you're finding, at least at that point, when you develop these into resources, how will that fit into the current plant, the current mine as it's currently planned, as it's currently envisioned? Do you have a capacity to expand the plant to take on new resources as they come in?
That's a good question, Brian. So at the current CIP plant, we will be at about 80% capacity. And so we have room to perhaps push that output up to probably 100,000 ounces per year would be our cap. And that is if we can bring in higher grade material as well. Currently, we're at 3.7 grams, but if we get up into the 4-gram range and tweak that plant, you could be pushing up to that ceiling of 100,000 ounces per year. So our first priority is to find like resources in the vicinity of the current pit, which we're working on an updated resource for, but also at Dark Horse, where we're seeing similar low sulfidation, heavily oxidized material that should fit well into that CIP plant. As we move further north up to the Alta-Nar project, 16 kilometers north, we do have a resource there of 500,000 ounces, for which about 40% of that is amenable to the CIP plant. We've done the necessary metallurgical testing. So we're lining up resources that can go into that plant. Ideally, as we look out 2 to 3 years, we'll see an expansion of that, doubling our footprint as we bring those resources in. And that could include CIP, or it could include also a flotation concentrate, because some of the resources at Alta-Nar are polymetallic and have significant credits in the silver, lead, and zinc byproducts.
Okay, well, back to David now with the Gold Terra. This has the potential to be a very big project, very big discovery. I know that your drilling coming up is targeting the kind of really monster discovery that the area is known for. Have you yet talked? I know that one of the potential scenarios for you down the road is takeout by a major, but have you, to whatever extent you can talk about this, are you getting interest from the majors? Because it's obvious it's a camp where somebody could just come in and move in and have everything they need in place already.
Thanks for the question, Brian. It's one that was asked and talked about more frequently in the early days prior to my arrival, and certainly in my early tenure with the company almost 3 years ago. And there is certainly interest. There, have been companies that were at site, and our focus right now is continuing to develop and nurture, foster the relationship that we just started with Newmont. We've got this agreement in place, and we want to show them that we can be very effective, efficient, professional. And we want to grow that relationship. So for now, our focus is on finding gold and making sure that we drive as much value for our shareholders. And we've got our sights set on discovery, but we're certainly not blind to opportunity wherever that may be. Whether it's people looking at us or us looking at other things. As a company in this space, and certainly in this type of environment that we're in, we've got to be flexible. But again, our focus is on finding gold and just working with Newmont on this option ground to fulfill our part of the bargain.
Well, I guess the best way to deflect on potential discussions question about potential discussions with majors is to point to a deal with a major. So well done. I can certainly see their interest in working with you for that project. Going back to Jack, we have a few questions that are related to really as you switch that open pit scenario, permitting in Guatemala, and as part of that infrastructure, how it might affect an open pit mine versus the underground. But one of our questions is it possible to permit an open pit mine in Guatemala? And how does that relate to the local settlements as far as the pit being viewable, et cetera?
Thanks for the question, and it is a good question. Before we decided to actually move forward with releasing the preliminary economic assessment results and pivoting fully and taking this strategic pivot, we did engage with the authorities. We do understand the permitting process here. It is well defined. We've gone through several permitting processes with the underground scenario in the past, and so we do have strong engagement with the Ministry of Environment and understand the terms of reference. And so we believe that we can get it permitted, and ultimately that's why we, not only just showing the good numbers, but believing that we can move this project forward, having a dedicated project team to bring that project forward. That's why we're doing this. With respect to land settlements, it's not a remote mine, but it is still about 5 to 6 kilometers away from the main town. So it is, mainly locked up around agricultural areas. We're not stepping out of our mining license, and therefore, depending on how much land we're going to need to acquire, which is not much. We currently have a significant amount of land holdings already. The pit itself does not extend outside of our current land holdings. So we're designing our infrastructure around areas that we believe would optimize kind of the vision of the visual of this new operation. And looking from the town towards where the mine is located, it is in a hilly region, so we would see kind of the mine itself is buttressed up against a hilly region, and therefore it is not something that we anticipate being a major issue. So in terms of permitting and land, for us, it's well defined the process and what we need, and that all played into why we are confident to move forward with this new, more robust plan.
And I think the market or investors can take some solace in also Bluestone being part of the Lundin group, because if there's any group that's been proven to be able to develop a mine in virtually anywhere in the world, it's that group. You certainly check all the boxes and know how to do so. Moving back to Alex with Empress, I'd like to see if we can take advantage of having you on this panel and your unique position in the market, dealing with developers and also growing a royalty company. Can you comment a bit on royalties versus streams, both from your point of view, if you have a preference either way, what the advantages or disadvantages are, and how the developers look at that, weigh that one way or the other as far as a source of cash for their development?
So with a royalty, it's when we're providing an investment into a company, and then we're getting future percentage of revenue in the future. With a stream, we're providing the same kind of capital, but then we're getting a percentage of the gold or silver at a discounted price. So they're very similar, but they're quite different. Typically, a royalty agreement is a little bit more simpler to document, a little bit more complex with a stream. We're finding that we're kind of doing a combination of both, where there's a stream for a certain period of time, and then it can step down to a royalty. It also depends on the jurisdiction. What's more tax effective. So there's, again, different variants that go with it. Some projects are already comes with quite a few royalties on them already. So a stream would therefore make more sense, but it's very much bespoke. And when we're looking at different companies of what they already have around them, what constraints they have, what vision they have for the future, what other groups they're working with. So we're kind of able to slot alongside of what they're doing, and each situation we're looking at is quite different. And you'll see that as more deals come out from us, how different each one and unique each one, and how we structure each one.
Yeah, the strength of your partners and strategic partners, I think is very important, obviously, but the fact is demonstrated or illustrated by the fact that you're able to get that royalty in Mozambique of all places, which is, I think it's safe to say, is a bit of an undiscovered region for mining. And that's a private company that you have the royalty with?
Yeah, so the project in Mozambique is a private company. It's right along the Zimbabwe border. This has been a long-term one we've been looking at. So we were actually looking at it to do a $10 million one about a year ago, before we kind of spun Empress into what it is now. The group ended up selling, so we got a whole technical team out there to site pre-COVID. So we were quite lucky in that in terms of our due diligence. And then the company itself, just the timing of COVID, they sold some other assets. So there was only an opportunity for us to come in for the 2 million. And Mozambique, I mean, it's got $15 billion worth of money going into LNG right now in the country. It's one of the biggest investments ever into an African nation. So a lot of comfort obviously comes with that, in terms of where Mozambique is now and where it's going to grow as a country.
Yeah, and the advantage, again, of a royalty company is you don't take on a lot of the hassles and risks of an operating company. And you can leave it to the locals to go ahead to handle those as best they can and just collect the money at the end.
Yeah, are able to keep our costs quite low.
Right. Back to Peter with Erdene. You have a considerable total resource inventory as compared with your mineable resource inventory. Can you talk a bit about, not just building resources through exploration, but those ounces that you already have that aren't currently in the mine plan and how they might phase in?
So today we have 409,000 ounces of reserves at Brien Lundin. We have an additional 230,000 ounces just sitting around that pit that is in the 3 gram plus range. And as I mentioned during the presentation, that pit was defined at a $1,350 gold price. So we're now working with Tetra Tech to update that resource, and ideally with the higher gold price, pull down that cutoff and pull in much of that peripheral gold to come up with a larger reserve ultimately. We've also done some additional drilling during 2020 that we think will help expand that pit footprint. As I mentioned earlier at Altan Nar, we have 500,000 ounces of gold, but we also have 3.2 million ounces of silver and about 130 million pounds each of lead and zinc. So there's significant value sitting at those deposits where we expect that to be a stage 2 development for us. And as I mentioned earlier, ideally, we increase the size of that polymetallic at Altan Nar and we pull in a flotation concentrate circuit, either at the current plant site at Brien Lundin or with a second facility built at Altan Nar. But plenty of upside. And in addition to that, which we don't talk about much, we have a very large copper molybdenum resource 40 kilometers to the east, the Zunmod porphyry deposit. So that sits in the background as well as something we would look to tackle in the future.
And one of our readers or viewers also submitted a question I think works well with this. What are the key milestones that you still have to check off before the first pour that we should be looking for?
So we're into the final stages of permitting. The last step is to have local consultations, which COVID has prohibited from having local gatherings. But once those take place, we file our DEIA with the government for approval, Department of Environment. We expect that to take place over the next few months. And you go through a series of construction permits with the local provincial authority. In addition to that permitting work that we expect to take place over the next few months, we're finalizing the debt arrangement with EDC. So that that financing package should be in place as we move into late Q2. With that, we can move into full construction, and those would be the key milestones to get us through the construction period to first gold in 2022.
Now, I would think that financing package would be a key point, a key catalyst potentially for a re-rating in the share price. That's something we'll be looking for. Although I don't anticipate much of a problem. This is me talking, obviously, not you, in getting that that financing package in place, given your relationships and with the banks. One final question. Our timer has gone down to 0, so I believe we're right about at 0, a little bit over right now. So one more final question for David here. Your upcoming drill program, that the box, as you try to simplify it for our audience, has the potential really to launch the value of the company because of the size of the target, simply put, that you're aiming for. So I think the market's really going to be looking for that very closely. Can you tell us a little bit more about that and the timing of when we should expect results?
Well, we as I said, we started this program really in November. We drilled a couple of holes for orientation and to set ourselves up for targeting the bulk of the program, which started in January. As everybody knows, assay results have been kind of like the gold price. So they've been a bit patchy, but we're confident that we can get results out to the market pretty soon here. We'll start to see results flowing back, and not only will they flow soon, but they'll flow for a while. So we're very excited about that. Thanks for asking.
Exciting news coming up for you. Exciting news coming up in developments over the next days, weeks, and months for all of our companies. I think it's interesting that today, just to comment on gold, just a moment or two, we had the U.S. non-farm payroll numbers come in this morning with a very large upside surprise. Typically, that's very negative for gold because it's good news on the economy, and yields rose. And on the news, yields rose again. The stock market showed some volatility, but gold has responded positively to that. And one of the things that I repeat endlessly ad nauseum in my newsletter, in Gold Newsletter, is that when a market is not rising on what should be good news, it's not in a bull market. When a market rises on what could be interpreted or readily interpreted as bad news, then sentiment has shifted and it is in a bull market environment. So again, nobody knows where the bottom is going to be. We should not look at the market as closely perhaps as we do on a daily or moment by moment basis, but it is encouraging that gold's up about $5 right now on what would have been interpreted as negative for the market as recently as yesterday or the day before. So maybe this panel has marked the bottom of the correction. Let's hope. And if it has marked the bottom of the correction, you can bet that the investors everywhere will be crying for a reunion at some point down the road. Let's hope it can be in New Orleans at the New Orleans Investment Conference. Thank you all for joining us today and for this panel. Really appreciate your input. And let's hope this correction ends very soon if it has not already. Thank you so much.